Hello everybody, my name is Karl. I am the owner of GTEC. GTEC stands for German Technology and Engineering Corporation. In this online course, we talk about what managers need to know about finance. This is a certificate course. Do you want to accelerate your career growth and achieve the following Mastery of Finance certificate? Get higher salaries, improve job prospects, move to leadership roles, gain on the job experience, and increase value to your employers. We will show overviews and examples. We will offer you a test at the end. If you pass, you will get an amazing certificate. At the end of each video, you will get a QR code and email to contact us. So, let us start.
To have organizational success, all managers should have strong money management abilities and financial understanding in areas such as budgeting, investing, and personal financial management. Without that understanding and mastery of fundamental financial abilities, the manager may make judgments that can harm the business, since every managerial decision has its corresponding consequences. Here are a few pointers to assist any manager to enhance their financial ability. Learn the basics of finance. Know the roles of financial manager. Understand the financial skills needed for managers and the ways to improve them. Finance encompasses the study and management of money, investments, and other financial instruments. It is the process of allocating assets, liabilities, and funds over time, process, and mediums in order to derive the maximum potential gain from an activity. In other words, the management or multiplication of funds to achieve the highest possible return on investment while taking into account the possible risks and uncertainty of the situation. This includes budgeting, saving, forecasting, investing, borrowing, and lending money. The easiest way to define finance is to give examples of the things it involves. There are many career paths and jobs that cover a wide range of financial activities. Here are some common examples. Investing one's own money into financial instruments such as stocks, bonds, or guaranteed investment certificates, GICs. The practice of raising capital through the sale of bonds to large investors on behalf of a publicly traded firm. Providing a lender with a mortgage loan so that the borrower can utilize the money to purchase a home. Formulating a company's budget proposal and revenue projections. Saving personal money in a bank account that offers a competitive rate of interest. Creating a projection for future spending and revenue collection by the government. There are three main types of finance: 1. Personal, 2. Corporate, and 3. Public/government. Personal finance. Personal financial planning involves examining an individual's or family's current financial position, forecasting short-term and long-term needs, and creating a plan to meet those goals within financial constraints. Personal finance depends on income, living expenses, and goals and ambitions. It includes assessing one's financial status, anticipated cash flow, current savings, etc., obtaining insurance to safeguard one's assets, calculating and filing taxes, saving and investing, and retirement planning. Corporate finance. Corporate finance is the study of how businesses fund their operations so that they can make the most money and spend the least amount of money possible. It deals with the day-to-day needs of a business's cash flow as well as its long-term financial goals, e.g., issuing bonds. Corporate finance also involves tracking cash flows, accounting, making financial statements, and taxation. Public finance. The federal government allocates resources, distributes income, and stabilizes the economy to prevent market failure. Most regular funding for these programs comes from taxes. The federal government is funded in part through borrowing from financial institutions and governments, as well as through dividends from private corporations. Local and state governments get federal funding and subsidies. Other sources of public income include user charges from ports, airports, and other facilities, fines for breaking laws, licenses and fees, such as driving taxes, and government securities and bond sales.